I've spent over 10,000 hours staring at charts, and honestly, most of that time went to waste. Late nights, early mornings, stress, confusion, even back pain could have all been avoided if I just had a clear plan. In this video, I'll share with you my experience and every step you need to follow to achieve profitability and the 3 biggest lessons I learned that made everything click. Now, when I first started trading, just like everyone else, I thought more hours meant faster progress. I would wake up before sunrise, study chart patterns, indicators, candlestick formations, believing that the secret to consistency was inside all of this information. But the more time I spent, the more confused I got. Then I realized I wasn't learning, I was just observing. I was reacting to the markets rather than understanding it, and that's when things started to change. So if you've been grinding for months, maybe even years, and still feel stuck, well, this video is for you, because after 10,000 chart hours, these are the 3 biggest lessons I learned that completely changed the way I trade. My first big lesson was understanding the relationship between myself and the strategy I was trading. You see, I used to think if I had a better strategy, I would just be profitable. But no matter what strategy I used, I always end up in the same situation, losing money and feeling lost. And then it finally dawned upon me, it was never the strategy, it was always me. How I traded it, how I applied it, how I managed my risk. It's not the strategy that defines the profitability of a trader, it's the trader that defines the profitability of a strategy. I asked myself the questions, what conditions does my strategy perform well in? What conditions does the strategy perform poorly in? And then I started to look at the bigger picture, higher time frame analysis, momentum, what phase was the market in? It's these components that came together to make me a better trader. I didn't need a better strategy, I just needed a better understanding of the market itself. Let's take a look at one of my recent trades, for example. Okay, so currently I am long on pound Aussie, and all it was just a simple flag pattern continuation trade. However, what makes it high probability is the context of the market. You can see the overall play is an uptrend. And as a retail trader, I can't start waves, but I can definitely ride them. All I'm looking to do is see if I can take a small piece of the puzzle, small piece of the pie, as price does continue this trend. And what also added to the confidence of the trade was the fact we had a recent pullback, retesting prior resistance turned support. We had price sweep this low and recover it. We had a very violent reaction with this bullish candle here, which implies some bigger players are coming to the market, adding long positions, and we saw that impulsive move happen. And all I'm looking to do as a retail trader is see if I can ride the continuation of that, betting on the trend continuing, betting on that momentum continuing, back to the recent high, back to the recent resistance. Now, all these components come together to what I like to call the market context. This is what turns a simple bullish flag pattern into a high probability opportunity. The second biggest lesson I learned took me even longer to understand, because again, with most professions, the more time spent, the more progress you make. In trading, however, the more time spent means nothing without reflection. If there's one thing I can change looking back over the past 8 years, it would be to exchange 90% of the time I spent backtesting with self-reflection over my live performance. I used to think if things are not working, I need to head back to the drawing board and spend more time backtesting, when the answers were always in front of me in my live data, my live performance. I spent the least time analyzing that, and I spent so much more time backtesting, learning new things, trying to find a new strategy, when the answers were always in front of me the whole time. In my early days, my journaling was inconsistent and wasn't very detailed. I only wish I started sooner and I paid more attention to it. I would have spotted patterns earlier, I would have fixed bad habits, I would have dialed into things I was doing well. So trust me, you learn more from your live trading data than backtesting will ever teach you. I'm not saying do not backtest, spend time backtesting, and make sure you're spending just as much, even more time on reflection, on going through your live data and going through your mistakes. This is what will take you to the next level. Now, before we do progress to the third and final lesson, and the most important, I do want to quickly show you a page in my journal going through a previous trade I took. So this is a small snippet of my trade journal of where I look back over the trades that I do take. This is a trade I took on gold, recently a loss on this trade here. So just going to give you an overview of the questions I ask myself and what I look at. So I take 2 screenshots, lower time frame, higher time frame. So lower time frame is the pattern, the entry, the exit of the trade, management as well. And then the higher time frame is the market context. So what we discussed previously on pound Aussie, this is just looking at the overview of the market. So what's the setting? And then I ask myself 5 questions. Market context, entry and exit, could I improve, mental state, follow my plan. The first question, market context, what's the context of the market? Very aggressive bull market. I was looking for a counter trend move, strong bearish momentum enter the market, and I was looking for a continuation of that. So if we quickly look at the trade, really aggressive bullish market, we had this strong shift, and all I was looking to do was bet on the continuation of that. And the entry and exit, flag pattern entry, so very simple, something I trade a lot. The exit was on my stop loss, Could I improve? This was a very bullish market. This was a good setup, but looking back, the trend was too aggressive to bet on for a counter trend move despite the recent bearish momentum we have. So if I could have done anything better, probably would be avoiding this setup because gold was just way too bullish to be looking for the counter trend move. And looking at my mental state, I was calm, but I did have a slight concern for the aggressive bullish trend, and it did follow my plan. So the fact that it did follow my plan did convince me to take the position, but looking back, I could have made it a bit more of a smarter decision and said, okay, gold's in this historic breakout, maybe it's best not to go against this counter trend. And this brings me to the final and most crucial lesson that 10,000 chart hours has taught me. You need consistency and you need direction. Because I was always changing my style and my approach to the market, and it took me years to finally settle on a trading style. And if you want success in this game, you need to make sure you become a master, not a jack of all trades. Like Bruce Lee said, I fear not the man who's practiced 10,000 kicks once, but I fear the man who's practiced one kick 10,000 times. Same applies to trading. If you could leave this video with one piece of advice, it will be to pick a lane and stick to it. I wish I spent all those 10,000 hours on one approach to the market and trading style. Let's say, for example, you choose to focus on trends. Well, ask yourself what type of trends. Is it aggressive trends, light trends, trends which are coming to an end, or trends which have just begun? Ask yourself these questions so you can find a niche within your niche. And then whatever that is, master it. All your efforts should be to progress in this particular style. You can always add new styles as you do progress later on, because it doesn't matter if you spend 100,000 hours back testing, going for your trades, journaling, analyzing your data, learning from your mistakes, if all of these hours are spent in different avenues, different styles, different trading strategies. Because if you really want an edge in the market, you need to be the best at whatever you're doing. So find a niche and get good at it. So if you spend hours upon hours studying the charts and you feel as if you're not getting any closer, trust me, I can relate. I have been there. Here is a step-by-step plan which you can implement today and will direct you towards your goal of profitability. So step 1, define your trading style. As we discussed earlier, is it trend following, breakouts, are you looking for reversals, etc. Define your approach to the market and your style. Step 2, go into even more detail about your approach and style to the market. So like we discussed earlier with trend following, well, again, is it aggressive? Is it light trends? Are you looking for trends that just begin? Also, what time of the day? What instruments are you looking to trade? These are the questions you really want to have mapped out so you know exactly it is what you're looking for. Step 3, define your entry and your exit criteria. If you look at me, for example, I focus a lot on continuation patterns, implying that there's a lot of momentum in the market and I'm expecting that to continue. So I look a lot at flag patterns, break and retest, anything that allows me to get into the market and anticipate more momentum. Now step 4, backtest this idea at least 100 times, but preferably a lot more. Don't really care about the results, just make sure you're recording everything so you can look back with fresh eyes and see what type of performance you're getting. Step 5 is refining your approach. Look back over your data from the back testing and see what's working well, what's not. What's not, get rid of that. What is, focus on that. What are the confluences present? What are the time frames working well? What type of entry, what type of pattern you trading that's working well. Focus on that and backtest that even more. Now step 6, this is where you start going to live testing. So you've back tested, you refined, you've back tested again, you've got a good understanding of what your strategy is going to be. Now you want to take this to the live testing, which is where it's going to test your mental game, your fortitude, your discipline, your consistency, and you can do this on a live account which has small capital. If you do lose it, it's not the end of the world. Or you can open a demo account. I would advise live because it does test the mental a little bit more than a demo, but the same principles do apply. Now step 7, look back at your results. What's not working? What is working? Again, same process as we repeated with the back testing. What is working? Dial into that, focus on that more. What's not working? Get rid of that, and then slowly scale from there. Trading is all about alignment with the market, and this process will teach you that, and it will avoid all the nonsense, all the hours spent doing nothing and not really moving the needle. So focus on this and I'll take you to the next level. If you can relate, drop a comment down below of your experiences. I'm interested to find out as well. If you are looking for some styles, some trading strategies, I will leave a video on the top left, or I'll leave in the description below, of strategies which I've discussed with my subscribers before and actually do work. So check them out if you are interested. But guys, thank you for watching. Check out the channel memberships as well. There are added members only videos there with a bit more detailed overview into trading insights, psychology, trading as well. There's some trade ideas I post there weekly too. So if you are interested, check them out too. But guys, really appreciate you tuning in. Have a great day. Catch you all in the next one.